Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research Incorporated, a broker-dealer member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated. You are listening to the Spend Life Well Show with Kingdom Advisor Mark Trice and Jesse Hamilton. Mark and Jesse are passionate about seeing you spend life well. If you want to save for and invest in the future, then this show is for you. Call now and join the conversation with your financial questions. 512-452-1120. 512-452-1120. Mark and Jesse will answer your questions and discuss practical financial principles based on a foundation of biblical wisdom. So if you're ready to quit worrying about your finances and begin to spend life well, then call 512-452-1120. And let's meet your hosts, Mark Trice and Jesse Hamilton.
Well, good morning, everyone. I'm Certified Kingdom Advisor Mark Trice, and I want to welcome you to the Spend Life Well Show, where we apply biblical wisdom to your financial journey. I'm normally joined in the studio each week with my co-host and fellow financial professional, Jesse Hamilton. Jesse has made the decision to run in a half marathon today, and he and his wife, Emily, are probably mid-route right now. They're running the Marathon half marathon in Waco. And if I can remember what he was talking about on the course, he is now hitting some very steep hills in Cameron Park. So we'll lift him up. Maybe he'll send a picture of it, he and Emily here, and post it to the show page later on. So we wish them well. Our verse today, and it's kind of appropriate for Jesse since he and Emily are running a race today. Hebrews 12:1-2 says, "Therefore, since we are surrounded by such a great cloud of witnesses, let us throw off everything that hinders and the sin so that easily entangles, and let us run with perseverance the race marked out for us, fixing our eyes on Jesus, the pioneer and perfecter of faith. For the joy set before him, he endured on the cross, scorning its shame, and sat down at the right hand of the throne of God." And so, Jesse, as you're running, hopefully your eyes are fixed on Jesus, and maybe you'll get some inspiration to get up those hills in Cameron Park just fine. So we are a live call-in show. We love to talk to our listeners. And since I'm here in the studio today, I don't have anybody to talk to. So why don't you give us a call here in the studio at 452-1120. That's area code 512-452-1120. And on today's program, we're going to continue and hopefully we'll finish our discussion of values-based investing because we think the Bible has a lot to say about how we invest our money. And so we want to talk about biblically responsible investing and give you a kind of an overview of that. Maybe you've got some questions around that. It's a relatively new area, niche of investing that I think a lot of people are interested in. So we're going to talk about that a little bit today. We'll also give you a recap of what happened in the financial markets and how those events going around the globe can impact your portfolio. And if we have time, we'll answer a few questions from our mailbag. You can actually send us those questions if you want. If you're following us on social media, you can post them there. If you want to send us an email, you can send that to radio@spendlifewell.com. That's radio@spendlifewell.com. And so we'll try to respond to those on the show. If not, we'll get back to you within 24 hours, or maybe we'll put them on in our mailbag for a following week. So as usual, you can also watch us live on our social media channels like Facebook, LinkedIn, Twitter, and I even think Instagram. I don't know how that really works, but maybe you can do that if you can figure it out. You can go to our website, spendlifewell.com, and there's some buttons there you can click to follow us on different social media channels and so forth. And you can also sign up for one of our upcoming educational webinars. I know our next one is coming up real soon at the beginning of the month, and that is on April the 2nd. April the 2nd, we'll have our monthly Spend Life Well market update. We'll answer your questions and so forth. And so anyway, we encourage you to follow us that way because a lot of times you may think of something throughout the week and it's like, wow, I wish I could have asked that question on the show. Just contact us and we will get that answered for you. So the question we want to raise is does it make a difference where you invest your money? And we're talking specifically about values-based investing. Now, if we can all agree, going back to our original verses in Genesis, that God owns it all. He's the creator of all things and he owns it all. Should we care about how we spend our money and how we invest our money? And so what level of detail do you think God cares about in your life? We're reminded that that God knows all the hairs, all the thousands of hairs on our head, or for some of us maybe a little bit less, but he knows all the details of every hair on your head. So why wouldn't God care about where we shop, what things we watch, what kind of car we drive, how much we give, and more importantly, where do I invest? Because this show is designed to help you to think about those things and give you guidance that the Bible has to offer you for investing and saving and managing your financial life well so that you can spend life well. So God owns it all. And we need to really ask him what to do with his money. Now, when Jesse and I created this show, I had a personal motive for that. And it wasn't to grow our business or anything. It was really just God was really been working on me the many, many years on how I need to give control of things to him. And because when Mark tries to do it his way, it doesn't really turn out the best way, I don't think. And I just wanted to share a little bit of my conviction because, I have personally over the years, there have been many times that, I've struggled with money. Maybe I wasn't patient enough to allow God to provide for a particular desire or goal that we had. I've been in times where I've been in debt, not for a house or a car, but just debt, trying to grow a business. Maybe I was impatient, not waiting for God to provide or just answering a prayer about what I should do in this situation. And so, we can't blame God for any type of money woes we have necessarily, that we go through different seasons of life. And, we want to be patient and listening to what he has to say. So, James 1:5 says, if we lack wisdom, we should ask for it. I'm paraphrasing, of course. And so I encourage you to do that. If you're feeling called, or if you're feeling led to say, to God working on your heart to say, I want you to do something different here. I want you to manage your money in a different way. I encourage you to continue to pray and ask for that wisdom because it may not come to you immediately, but it will come. I can remember one of the most important phases in my life, if you will, and that was when I finally felt convicted as a young adult that we needed to tithe as a family, as a couple. We had no children then, but we needed to tithe. And tithe is, there's some scripture in the Old Testament that tithing talks about a tenth of our incomes or tenth of what we have. That's a personal decision, I think. I've kind of used that as a guide for my personal life. But I remember the time that we decided that, I was convicted that we were going to really start giving or tithing in a consistent way. And we were living we had relocated from Texas to the Washington, D.C. area. I went up there to do some schooling. My wife had no job at the time. We're newly married. And of course, we were broke and had a lot of student loan debt. And, I don't even think Holly had a job. Well, maybe she had just gotten a job at that time. But I was outside. I had built a little flower bed, and maybe I should have showed some pictures sometime of that. It's really, really cute. But as any good Texan would do, it was springtime, so I was trying to plant some bluebonnets because, if you want to remember home, that's the thing to do. And I'm already seeing a few bluebonnets around, so hopefully you'll begin to see those as well. We're always blessed by bluebonnets in the springtime. And my wife came out to tell me and said, we have $42 left. And we had just gotten paid. What little paltry amount that we had paid. If we just paid our bills, we had $42 to make it through the next 2 weeks. And so I'm thinking, and we hadn't even been to the, the grocery store yet. Anybody can relate to this, maybe? Um, and so God had been really been working on my heart during that time that I needed to start tithing, and I was very convinced that that's what we needed to do. And a tithe for us at the time, relative to our income, wasn't a whole lot, but it was significant, especially when you have $42 in the bank and you haven't been to the grocery store yet. And for some reason, I felt God tell me that He's going to provide. And I'm not a you know prosperity theology guy. I don't believe that type of stuff myself personally, but I did know that God would provide. And so we made the decision to go ahead and write our little tiny paltry tithe check to church that week, and we just prayed. We had a lot of crackers in the pantry, but we needed to go to the grocery store, and I felt convicted though, and so did my wife. We were on the same page, and but God had blessed us in so many ways. There were so many things that He blessed us with during that week, not just in a monetary sense, but He provided. And later that week, I got an envelope in the mail. It was from the Commonwealth of Virginia. They have this thing up there called a car tax. And apparently I had overpaid by a couple $100. And so there was a check in there in the mail for, $200 or so. And we were able to go to the grocery store, had plenty of food, and God provided. But it's ever since then that I will not tithe, if that makes sense. And I found that God has been working on me through the years and changing the way that I view what I'm supposed to do as a good steward to shepherd the money that He's entrusted me with, whether that's a little or a lot. And investing and where we spend our money is very important. And I think God does really care. So let's talk for a moment about, what um, biblically responsible investing is all about. And sometimes we'll talk about faith-based investing is generally the same thing, but you'll see this in the media. The investment news channels and things are talk about ESG, which stands for environmental, social, or governance aspects of investing. And there've been a ton of different types of ETFs, mutual funds that have come out that are focusing on that. Now, some of them are not truly what I would call that fit those screens, but within that, there's a niche or a microcosm there of faith-based investing funds. And we manage investment models for folks that want to take that approach with their wealth. They want to make sure that they're investing in a way that's honoring, glorifying to God. So faith-based investing, it's really important to understand this a little bit. There's a little bit of uh, a false dichotomy between investing and charitable giving, but we'll get into that sometime. But it's inaccurate to assume that only charitable gifts have a social dimension. All businesses have an impact, or as I call a social return, on their employees, their customers, and the community. Right. So we just need to think about that. What's the impact of that business on the community, on their employees, and so forth? And so the way that a lot of faith-based investing works is to go through different types of screens. And so really there's two main ones that we kind of focus on. And that the first is a do no harm. We want to make sure that company that we're investing in is not causing harm to the community or their employees or their customers. And we call that a negative screening. So you might think of it as I don't want to invest in any stocks or mutual funds that are investing in industries which promote pornography or maybe abortion. And so we can screen out a negative screen. We screen those things out, and there's a number of funds that will screen for those things. There's usually about 9 or 10 different types of screens if we're doing negative screens. And so we look at that because investments, we still want to have a positive financial return, and faith-based investments have actually done very well since they're have been coming out in the last several years. And then we also want to look at faith faith-based investing is to do good. So what are some positive screens? And so we want to look at those things that where we're screening for things that companies that are doing good. So you might think of a parallel of this is like to the medical industry, right? Physicians take an oath, the Hippocratic oath, where they say "do no harm," and it's fundamental to that practice of medicine. But the goal shouldn't be to stop there. The ultimate goal of medicine is to heal. Likewise, we should not merely seek to avoid companies doing harm, but we want to look for companies that heal. Those who are helping make the world a better place. We had just come back a few weeks ago from the annual Kingdom Advisors Conference. If you're looking for a faith-based advisor, look no further than kingdomadvisors.com. You can search for an advisor in your area. There's a few in Central Texas. I'm being one of those. But we think about these things from a standpoint of, is that company making a positive impact? And so when we come back from the break, we'll talk more about this. We'll also talk a little bit about the markets this week. I just want to think about this. Are the things you're investing in doing good to help the world? When we come back, we'll take your calls, 452-1120. You're listening to the Spend Life Well Show.
Join us on Facebook to see the fun that goes on at the Bridge Austin. There's behind-the-scenes pictures, live videos, and news. We have a wealth of faith to share with you. Just look for the Bridge Austin on Facebook and hit like.
In a world full of greed, is it even possible to invest and save for our future in a way that aligns with our faith and our beliefs? Hi, I'm Certified Kingdom Advisor Mark Trice and founder of Clear Vista Financial here in Central Texas. As a fellow Christian, I believe that the answer to that question is an unequivocal yes. You can invest and manage your wealth in a way that will honor and glorify God. Want to learn more? Visit us at spendlifewell.com or give us a call at 800-491-4508 for a complimentary consultation, and we show you how to spend life well and honor the Lord with your investments. Why don't you register for one of our upcoming webinars at spendlifewell.com? That's spendlifewell.com. Advisory services through Cambridge Investment Research Advisors, Inc., a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated. Welcome back, everyone. I'm Certified Kingdom Advisor Mark Trice. You're listening to the Spend Life Well Show. You can give us a call in the studio at 452-1120. That's 452-1120, or send us an email at radio@spendlifewell.com. We'll get to your questions on the air during the show, or we'll reply back to you within 24 hours just to help you answer the question. We love serving our community, and we love helping people learn about what the Bible has to say about managing the wealth that we've been entrusted to. We're all called to be good stewards, and the financial industry has been changing over the last few years, and really in response to the demand of consumers. And consumers are asking for investments that are based in faith, and also that eschew values that are in line with the Christian community. So we were talking about faith-based investing. Sometimes you might hear it referred to as biblically responsible investing. They're kind of one and the same, but we were talking about the different types of screens that ETF and mutual fund companies are developing for investors. And so we were talking about negative screens there, and some of those might be we want to weed out companies that are involved in the manufacture, sale, or distribution of pornographic content. Maybe that for you is alcohol or tobacco or gambling, or maybe you're concerned about human rights, and you don't want to invest in any companies that might be employing children as slave labor, or supporting human trafficking and stuff like that. But there's also positive screens as well. And, there's a number of different funds out there. We've identified roughly over 70 mutual funds and exchange traded funds that are out there on the market that are available to investors to do that. If you really would like to get help with that, you can contact us. You can send us an email at radio@spendlifewell.com, or just give us a call in the office. But if you go to spendlifewell.com, you can get our contact info. That's spendlifewell.com. That'll take you to our business page. And you can also get replays of past shows and things as well. But some of the positive screens that are out there might be something along the lines of, a positive screen might be product integrity and innovation. In other words, they create products and services which are helpful and create value rather than extract value or harm users. We also look at companies that have a positive business model, or maybe their corporate governance policies are uh, uh, fair and balanced regarding executive compensation. They're ethical. What about the social impact? Daniel, there went that sign that you've been telling me is going to fall every week, and it finally did. Um, Social impact. Are companies actually helping the environment? And what are they doing to sustain the environment? Those are all positive screens for the different types of investments and things. And so a number of companies have worked hard to put together investments which go through these screens, and almost all of these companies out there will provide you some guidance as to what you would like to screen for. So maybe you don't have a problem with alcohol, but you do with pornography, and so you want to screen for those things. And a lot of the news in the media have been really kind of negative at first. It's like, well, these investments can't do as well as normal investments, and it's quite frankly, it's not true. We've got some research that we'd be happy to share with you if you're interested, that shows that faith-based screens or biblically responsible investment screens actually do just as well, sometimes better than your typical normal market indexes. So that's really encouraging. And we're seeing more and more clients that are saying, you know what, I want to make sure that my investments are honoring and glorifying God. And so we like to be able to provide that. And so, if you're interested in that, you can give us a call. Or if you want to talk about it here on the show, give us a call here in the studio, 452-1120, 452-1120. It's really cool to see that this is really happening. We want to make sure that the companies we invest in are being good neighbors. I'm reminded of one of Jesus's parables in Luke 10:25-37. It's the story of the Good Samaritan. Remember that, folks? It's the story in which three individuals encounter a man on the side of the road, just been robbed, beaten, and left for dead. And the first two observers, if you remember, was a priest and a Levite, and both neglected to help the man as they passed on the other side of the road. And then that third person, a Samaritan, came and took pity on the man, bandaged his wounds, found him shelter, and paid for it on his behalf. And after Jesus told that parable, Jesus asked, which of these three do you think was a neighbor to the man who fell into the hands of robbers? And when the listener answered that it was a Samaritan that had mercy, then Jesus instructed him to go and do likewise. We really need to think about how our actions with money can really are reflections of our heart and reflections of how we see and honor and glorify God. And so faith-based investments provide believers an opportunity to invest with their values and their convictions. And so, when we think about these things, there is a number of different ways that we can define neighbor. If I think about, loving my neighbor in business, that means how do I seek as a business owner to evaluate the impact a company has on our clients, our employees, the community? Are we using suppliers that also honor and glorify God? Are we making an impact on society? And are we, as another type of screen, are we making the right choices for the environment? And I think that's really important that we look at all those things. And I'm going to find here an article that I was trying to pull up here for us. I must have closed it up. Oh, here it is. So one of the things that is really challenging, because it's hard not to watch a television commercial these days for investing, and they usually show up on sporting events and things like that. I know I'm watching the March Madness, the NCAA basketball tournament a lot. And there's a lot of investments out there that they advertise. And of course, if you just invest in them, then you'll be wealthy. And we know that's not the case. So remember when I mentioned the first segment of the show, we were talking about ESG or environmental, social, and governance type funds. Now, these funds, of which faith based investing is a niche of that, there's more than 1 trillion assets out there that are invested in these things, according to one index that's tracking this particular market. So, interestingly enough, a forensic analysis of the industry resulted in this ESG tag because you don't really have to do much. You basically say, "Hey, this fund is ESG certified, if you will." You don't really have to prove it. But recently, Morningstar, which is their classification system, they removed more than 1,200 funds, or roughly one in five funds that were tagged themselves as ESG or adhering to responsible environmental, social, and governance type disclaimers, removed them from their list because um, they could not prove that the actual fund was actually addressing any of those issues. And so this kind of feeds into the concerns that asset managers are still making misleading claims just because they know that you think that's important and you might be willing to buy that. So I ask you, you should be very careful. You want to talk to someone that understands faith based investing that can help you screen for the investments that are out there because there's a lot of people out there that are trying to put the ESG label on there just so that they can attract your dollars and get your investments. So, these calculations suggest that vast sums of money have been misallocated. And so you might think that you're helping the environment with that investment, but maybe it's not. So be careful about that. Make sure that you are looking what you're invested in. I think the faith-based investing on our values and through that, the biblically responsible investing, I think it's a great thing. And I think it provides a conduit for believers to invest with their values. And I think that's just awesome to do that. So we'll be happy to give you a list of ETF and fund providers. One of the cool things about working with Kingdom Advisors and being a member of Kingdom Advisors is when we go to the annual conference, which we do every year, all these mutual funds and ETF companies are there. We get to screen them. We get to put them through the ringer, and we learn about the process that they use to screen those investments so that you can have confidence in those investments. I want to make sure that you give us a call here in the studio if you'd like to talk today. We find that sometimes people are still waking up. They haven't had their second or third cup of coffee on a Saturday morning, but you can give us a call here at 452-1120, 452-1120. Also, look us up on the web at spendlifewell.com. So I hope that's a good primer on faith-based investments. If you'd like to talk more about that, give us a call here in the studio, or we can simply talk sometime offline but we think it's very important. We think it's important for us to differentiate ourselves as financial advisors, and we want to offer our clients investments that are in line with their values. There was a research study done about 3 years ago that basically said there were probably over 100 million uh, um, households or 100 million individuals that would prefer to work with an advisor that shares their values. And that's great. We pride ourselves in making sure that, if you have a particular belief and you want to follow your faith, we're going to help you do that. But let's take it a step further and say, I want to make sure that my investments, where I am investing my money, how I'm spending my money, is honoring and glorifying to God. So I think that's one way that you as an investor can be good stewards of these things that you've been entrusted with. and make some wise investments that will not only help you reach your goals, but also honor glorified at the same time. So, we're living in a time that's really uncertain. We've got a global conflict. Some people think we're on the brink of World War III. Let's hope not. But these are uncertain times. But I can tell you, as a financial advisor, I would say we've never lived with less risk. I mean, I'm saying the opposite. Things are uncertain, but we know more things today than we did 20 years ago. We certainly know more things than even the financial crisis in 2007 to 2008. Now, that may seem kind of crazy, right? Coming out of a pandemic that disrupted our lives. We talked about the conflict in Europe, but there's a big difference between risk and uncertainty, and each requires different coping strategies. Risk can be managed, right? It can be managed with insurance, hedging, how do you manage your investments, whether it's on an active basis or a passive basis. But uncertainty demands one thing, and that's flexibility. If times are uncertain, there's a lot of uncertainty in the world, we have to be flexible in our investments. And so one of the things that we focus on is making sure that we're flexible and responding to the negative and positive things that go on in the world. And a lot of investor advisors don't do that. They're going to put you in to a static portfolio that stays the same year in, year out, regardless of what's going on around the world, regardless of the different types of risks that we may face, regardless of the uncertainty. And we think that there's a better way to do that. So it's important to know when you're making big life decisions like buying a house, changing jobs, where to invest, having a baby, when do you decide to retire? And risk, that includes things we can measure and see coming. Uncertainty, though, arises from the things that take us by surprise, right? Now, society has become very adept. Society has become very adept at measuring and managing risk with the help of data and new technologies and things. We see this in the stock market, in the housing market, even in our culture where data can increase the odds we'll enjoy a movie on Netflix or a song on Spotify, right? How many times have you been walking around the house and talking about buying a mattress, and then suddenly you pull up your phone and on Facebook and there's an ad for, you guessed it, a mattress. So when it comes to things we can measure, much is left to chance. And if we can't eliminate the risk, we can insure against it, such as using stock options or insurance against a falling share price, for example. So since the 70s, we've had more ways than ever to manage or eliminate risk in markets, in the economy, and in really many aspects of our daily lives. The payoff was rising markets, low inflation, until recently, of course, inflation's real high. And we want to make sure that we can manage these types of things. The problem is when we get whacked by something we're not expecting, like pandemics or wars that send the world spinning. And so we can do these things, but managing your risk is really important, but also just being flexible in this time to say, maybe I need to make a little bit of a change here with my investments. And so when we come back from the break, which we're about to take a little break here, I want to talk about what went on in the markets this week. We may be finding a bottom. I want to tell you about that and give you an update on those things. We'll talk more about risk and uncertainty and help you manage your portfolio. You're listening to the Spend Life Well show. I'm Certified Kingdom Advisor Mark Trice. We'll be right back, but give us a call in the studio, 452-1120. We'll be right back. Did you know the Bible talks about money and possessions over 2,000 times? Well, maybe we should pay attention. Hi, I'm Mark Trice at Clear Vista Financial. We work with clients to steward their resources based on a foundation of biblical wisdom. Learn more about Clear Vista Financial by visiting our website at spendlifewell.com. That's spendlifewell.com.
Securities through Cambridge Investment Research, Inc., a broker-dealer member FINRA, SIPC. Advisory services through Cambridge Investment Research Advisors, Inc., a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated.
Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research Incorporated, a broker-dealer member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated.
All right, everyone, welcome back. I'm Certified Kingdom Advisor Mark Trice. You're listening to the Spend Life Well show, where we talk about biblical wisdom and apply it to your financial life. I'm glad you've chosen to spend a few minutes with us this Saturday morning, and I hope you're off to a great start, just having a relaxing day, or maybe you have to go to work. But we're thankful that you've taken a few moments to stay with us and listen with us a little bit. We are live here in the studio, so we can take your calls on the air at 452-1120, 452-1120. I wanted to kind of give a little bit of an update in the markets this week, because this was a little bit different week, and I believe that we may be starting to see the signs of a bottom forming in the overall S&P 500. The S&P 500 was up quite a bit this week, actually a little bit over 6%. Of course, that's quite rapid increase in 1 week. We'll see if that holds. We seem to ignore data that was negative to the markets this week. We on Wednesday, we had the Federal Reserve announce a 1/4 point increase in the overnight Fed funds rate. That takes that overnight Fed funds rates from 0.25 to 0.5%. Now, this is going to have a big impact on borrowing costs. And so if you're wanting to look at getting a house, getting a mortgage, maybe finance a new car, all these things are going to be impacted by the increase. And there was a little bit of, I wouldn't call it dissension, but inconsistency among the Fed chairman, Fed regional presidents, and that their consensus about how many interest rate hikes we will have vary quite a bit. Some think we need to have a lot more than we're talking about. Right now, Chairman Powell basically said that he expects that we'll have about 6 more interest rate hikes. Their goal is to get that to around 1.9%, up from 0.5% now by the end of the year. 2023 will be more, and ultimately, hopefully, that will be enough to cool inflation and calm down this really hyperinflation, high inflation, if you will, in the market. So that was big news this week. It was fairly well forecasted, if you will. In other words, the Fed chairman and the Fed presidents around the country were giving speeches in the last few weeks, and they were all kind of pointing to this 1/4 point increase. I think it would have been a surprise if it was a 1/2 point increase, but I'm afraid that the Fed is too late. I think there's a lot of experts, economists that are talking about, we may enter a period of stagflation like we did in the late 70s, early 80s. And stagflation is when the economy is slowing down, and their forecasts for GDP growth for the remainder year are quite lower than they originally said at the beginning of the year. I can't remember those exact numbers, but I think it was like 4% growth in GDP down to maybe 2.9 or something like that. And that's quite significant. So as borrowing costs go up, so will companies' ability to respond and grow and so forth, maybe hampered as well. So we got those two things. And stagflation is where we continue to have rising high inflation, and we also have a cooling or even a contraction of the economy. Now, we don't want a recession, but that's how they fixed the high inflation in the 70s and early 80s, was to create artificially a recession. And we all remember, if you were around then, you may remember there was a lot of unemployment in the early 80s. In fact, when Reagan took office in the early 80s, I was a wee lad, but I do remember watching the news and things like that, even though I was young. I was a little bit of a nerd probably. But we remember these things, and people unemployed and a lot of people out of work. And that was the result of a recession. But that was artificially created on purpose by then Fed Chairman Paul Volcker. And so we anticipate that interest rates will continue to rise. I don't know if they'll wait to every Fed meeting. The next one's in May. I don't know if they'll wait till every Fed meeting to continue to increase those things. I think we're going to see when we get March data for inflation, it's going to be a lot higher than February because the February inflation numbers, and that was around 7.9% inflation, did not include and did not account for the invasion of Russia into Ukraine, and when gas prices started to spike. We're seeing gas prices begin to stabilize. That's mainly because we've seen the price of a barrel of oil begin to fall a little bit. It's still well above $100 a barrel, I believe. I haven't looked at it today. But those price increases in oil, the cost of oil, will begin to trickle through to the gas pump in about 2 or 3 weeks. So we should be starting to see here in the next week or so the impact of those higher oil prices at the gas pump. And you may be thinking, "Hey, Mark, we've already been paying a lot more. I know I paid $3.99 the other day to fill up for regular gas. You're saying this might go a little higher?" Yes, it may go a little higher. And so, hopefully not too much higher because I know that impacts a lot of businesses and their ability to grow, service customers, et cetera. So a lot of things going on this week, from the Federal Reserve to Russia increasing its invasion and being more harsh in Ukraine. The Ukrainians are not giving up, and they will fight to the end. I'm hopeful that Putin will come to his senses and create things, but it's brought a lot of questions up about how about our policies in the U.S. towards energy. We had a new administration a few years ago come into the office. Well, it's just a little bit over a year now, and instantly we went and basically said we're going to punish those that drill for fossil fuels, and those policies have had a negative impact on the oil economy, natural gas, and I can support you if you really want to, help the environment by not using fossil fuels and things. I can understand that, but fossil fuels have such a tremendous part of our economy, and it takes a long time to do that. And by just actively going away and saying no drilling for you, we created this environment where we could not be flexible. Remember when we talked about in the last segment being flexible in uncertain times, and the our government has put us in an inflexible situation to the point that we're now negotiating with dictators and terrorists to buy oil. And I'm not going to talk about politics here, but that's one thing that's causing the price at the pump to go up. Now, granted, Vladimir Putin is responsible for invading Ukraine and causing the uncertainty in the energy market. But our policies here in the US have created an environment that created a situation where we cannot be very flexible when it comes to how we supply our energy needs. And so, with that, I just, we hope this ends real soon, but we have to be really ready to adapt and do that. So the S&P 500 is up a little over 6%. Year to date, though, the S&P 500 is still down over 6%. Let me see if I can get some accurate numbers here with my fancy computer. From the highs, we're down about 7%. So from the market high, which is in the early days of the year, January 3rd or 4th, from that market high to where we ended on Friday, we're down a little over 7% year to date, or from that high. And so that's, S&P 500 is the 500 largest companies in the United States. They're kind of representative of that, but typically the larger companies are the ones that move the index. So your Amazons, your Googles, and things like that were moved a lot this week. And that leads us to talking about the NASDAQ, which is typically a little bit more tech heavy. The NASDAQ was up a little over 8% year to date. It's down still over 11%, 8% for the week, down 11%, over 11% year to date. And since its high back in November of last year, the NASDAQ is still down, 16, 17%. And so we got a long ways to climb out of that. And why is it so important that we focus on preventing losses? Because when you lose money, you have to earn a lot more just to get back to where you were. So, for example, if I lose 10% in my portfolio, I have to earn 11% just to get back to where I was before the decline started. If I lose 50%, then I have to earn and have returns of over 100% before I get back to even. That's why you look at the last financial crisis in '07 to '09, and it took over 5 or 6 years for people just to get back to where they were prior to 2007. That's a long time. What if you're thinking about retiring? What is your plan? What is your advisor's plan to deal with that type of uncertainty in the markets? And many people just buried their heads in the sand and didn't do anything. The most common response that I heard during that time was, "Don't worry, it'll come back." So, as I was finishing my conversation about the S&P 500, we're beginning to see, and we're technical analysts here in our office. We have a number of smart people that look at these things. It seems as if the S&P 500 is beginning to form what we call a bottom, and a bottom in the market is very positive. It looks like the Nasdaq might be doing the same, but that's nothing to say that tomorrow or Monday morning we wake up and there's another crisis around the world, and we see that fall. But we are beginning to see that. Now, last week, one of the things we talked about on the show was the S&P 500 was making a death cross move, and that sounds really ominous. It typically means that the 50-day moving average is falling below the 200-day moving average. And we look at these moving averages from a technical aspect because it's important and it helps us determine the momentum of the market or the momentum of a particular security that we want to look at. And so it had that death cross this last week. But what we've seen is we haven't had a death cross since March of 2020. When you do have those death crosses, don't let them scare you too much. It could mean that the market could continue on down, but generally, when we have that type of cross in the moving averages, we see typically sometimes positive growth in the year after that. So, you know what? It things do look kind of dark and gray with a lot of uncertainty, but there's some positive signs as well. The Dow Jones is down for the year still. It had a similar week. It's forming a similar bottom. We look at small caps. It's been bottoming since really February. We're still in this trading range, and I'm not ready to invest in those things yet, but maybe here real soon. In the bond markets, of course, with interest rates going up this week, that you would think that that might impact the bond markets, and it did a little bit, but we've had a lot of ups and downs in the last few weeks. The 20-year Treasury type bond that we look at is down almost 10% for the year, but it had a positive date on Friday, down a little bit for the week, about 1%, which is a really big move when you're talking about bond markets. So we see that down 10%. If you're holding the typical balanced portfolio or perhaps a 60-40 portfolio, some people might call that moderate. You want to check that and have a conversation with your advisor because bonds are dragging the portfolio just as much, even in this case, worse than stocks this year. And so you want to make sure that your advisor is aware of that they're doing something about it. And if you don't have an advisor or you just want a second opinion, you can give us a call. Check us out on our website, spendlifewell.com, and we'll be happy to, you can request a consultation on there, and we could be happy to talk to you about your portfolio and just give you a sanity check, just so you know, and give you some peace of mind. You don't have to work with us for us to give you a second opinion. So we encourage you to do that. So, a lot of uncertain times here. We're beginning to see some bottoms to potentially form, but it's yet to be seen. The thing I had to think about that, speaking of it, I found an article from March, and it was really talking about when the market bottomed in 2009. That's about 13 years ago. The financial world was in a free fall. Some of you may remember Lehman Brothers, which is a financial institution that had been around since before the Civil War, and they declared bankruptcy. I think that was around September the 12th or mid-September, because I was looking at the market. The markets went down 12% that one day. So mortgage delinquencies were skyrocketing, peaking at 11%. 1 in 10 workers were without a job. things were dire, right? And the chaos was reflected in the stock market, which in 17 months from its peak in October of 2007 was just trading at 45 cents on the dollar. If investors were told to hang tight, the S&P 500 would return 17% a year for the next 13 years. Nobody would have believed that. The sky was dark and it seemed like the sun would never shine again. You remember that. That was 2009. But a lot of times, folks, the darkness gives way to light because hope is more powerful than despair. People never lose the motivation to provide for their families and to make a better future for from the past. And so think about things. This is just a list of things that we didn't have there during that time. Think about Uber. How about streaming? Well, we technically did, but you didn't really want to stream anything. We didn't have things like Zoom, AirPods, crowdfunding, Venmo. Since then, we've got reusable rockets and smart items in the home. You might have a Ring or Alexa or a Nest type setup in your home. We didn't have iPads then. Electric vehicles did exist back then, but they had basically no market share whatsoever. And, here pretty soon we'll have self-driving cars. We've even got standing desks. Who would have thought we had a standing desk? We've got one in our office. They're awesome. And so lots of things were happening. All that progress is quantifiable, and it ultimately reveals itself in the stock market. And so, I think optimism will prevail, but I do think that you need to make sure that you have an advisor working with you that will see that optimism and help you manage that risk and uncertainty. It's real easy, folks, to overweight today's problems and underweight the worries that are now comfortably in the rearview mirror, right? So it's like we've had a lot on our plate, right, as investors the last several months. And so we want to make sure that you have a partner to do that. You can call us at 800-491-4508. That's 800-491-4508. Or look us up on the web at spinlifewell.com. Until next time, folks, I'm Mark Trice. You're listening to the Spin Life Well Show. We'll talk to you next week. Have a great day.